I traded supply and demand for over 1 year straight, and let me just say it completely changed my trading forever. Supply and demand has helped me with, passing phase 1 and 2 of FTMO and actually also making it to a payout. I know that the payout is actually not the biggest, but let me just tell you this, it was on a 10k account, and come on, we all gotta start somewhere, right? But that was 1 year ago. Nowadays, I still use supply and demand. If you watch some more videos on my channel, you know that I use a so-called toolbox. Supply and demand is just one of the many strategies that I use. But supply and demand is definitely one of the most simpler ones and the ones that just dramatically increased my win rate. Now, supply and demand will not magically transform your win rate into 100% or something, because let me just say, there's no 100% win rate. Come on, let us just be real here, right? But supply and demand is pretty damn simple and very good to use, and I'm going to be showing you guys how to use supply and demand completely for free. So if you appreciate this, let me know this by just liking and subscribing, right? Let me know in the comments below what you want to see next. And without any further ado, let us just jump right into the charts and explain what supply and demand is, how to draw these zones, and how to take entries, where to put stop loss, and all of that. Let's go. Alright guys, here we are once again on the charts. The glasses are on as always, and right now on the charts we can see, in yellow we can see a demand zone, or like a demand chart, and on the purple one we can see like a chart example of having supply. I'm gonna be showing you where these zones are in just a second. As always guys, simplicity is key, and I'm not gonna be sitting here and overcomplicating this. What is demand? Demand is basically just a phase in which the market is just bombarded with a lot of buyers and the price just skyrockets up. And for supply, it's exactly reverse. So it's just sellers entering the market with so much pressure that the market just goes down. Crazy sound effects, I know, right? But seriously, this is how demand and supply works. It's pretty damn simple. I'm gonna be showing you guys this just now. On the other example here we can see demand. So if we know that demand is just price rallying up, that is exactly what we want to be looking at, right? If we now know that we are looking for price to just rally up like crazy, this is exactly what we want to be looking at. Where can we see increased buying within these line charts? Well, the most obvious one would be this here. It completely shot up whenever we were in this area. So I know this is a line chart right now, but we are going to be looking at candlesticks in just a second. We will be switching over to candlesticks right here, and we will be marking up a specific candle, and I'm going to be showing you guys how. We will just draw a zone here and putting it to the right, and you can already see what happened. What we want to see is we want the market to shoot up like crazy and then slowly coming down to our zone again, not too crazily, because that would just make the zone invalid, at least from what I'm saying. And yeah, we would just wait for the price to come down into the zone, and whenever price comes back into the zone and it actually shows that some sort of rejection or whatnot, we would be looking to go long and to buy in that trade. So that right here is of course a perfect example of what demand is, right? But just so you understood it one more time, if price suddenly shoot up like crazy, we'll be looking for something to mark it up right here, and next time market actually slowly came back into that zone, we will be buying again, simply as that. Now, and for supply, it's basically just the reverse thing. Instead of us looking for buyers to enter the market, we will be looking for increased selling, and the most obvious one in this example would be here, where the line is just completely going down like crazy, right? So we'll be looking at the last point in which price was somewhat stable and whatnot, and we will be marking it up and we will be dragging it over to the side. And next time price actually slowly came back into that zone, we would be looking for rejections, or we would be taking aggressive entries and whatnot, putting our entries here and whatnot, stop loss maybe over these highs and whatnot, and then we will be just be trading this in general. Alright guys, and here's just a little quick tip. I said it before, we want to see price to slowly come back into our zone, just like that. We shot up like crazy, marked up our demand zone here, then we were like floating around a little bit and slowly coming down into that zone, and as soon as we approached the zone again, then we shot up again. That's what we want to see for a valid supply and demand zone. And this here would be an example of a zone which we wouldn't want to take, because price just completely shot up and it immediately reversed back on us. It's telling us that the price doesn't want to stay here. Sometimes something like this can work, but it is just in general more risky to take a demand or supply zone just like that. Just as a little quick tip for you. And now let us jump onto the candles with real examples right now. So right here we have a good example on gold. Once again, this is in hindsight, I know, but this is just for you guys so you can actually understand the whole concept in general. Here I think is a prime example of what I want to see on the chart. And I mean this rally here, right? We shot up like this, like crazy, okay, we are in an uptrend, okay, that's cool. But here, these candles are crazy. They tell us like, we want to go up. We want to go up like crazy. The bigger the candles, you know, the better the signal. And what I would be wanting to do is just take the last candle that is not going into the direction, right? And that will be this candle here, and we would just mark it up. Sometimes I take like a whole block, you know, out of the price, you know, maybe the, you know, the 1, 2, 3 candles that I can see here, and mark it up as a zone. If we did that, in that case, we can see that price ultimately came back into that zone and traded up again. And we could have taken entries all over here, for example. If we, for example, saw that price came down like this, you know, we shot up, and the moment that this candle broke this candle here, for example, we could have entered the trade right here, and we could put our stop loss below, and then we could, you know, aim for these highs, for example. Or we can, you know, take a fixed risk to reward like 1 to 2, 1 to 1, whatever works best for you. Or we could use trading stop loss and whatnot, and you can see you could have catch yourself a pretty good trade on that side here. And by the way, just as another quick tip, if I use the rectangular shape to actually draw my zone, I mean draw the whole zone, like from the bottom of the candle wick to the highest. In that case, we don't really have a wick right here, but you know, you understand it, just like that. You know, that would have been a good zone in general. And for example, if that were, you know, because it actually is a zone, right? If we wanted to mark this up, we would take the highest point, also the wick, drag it all the way down also to here, you know. But since it read it up like this, I would take this also into consideration and just drag it to the right, and that would be the next zone. You know, price never came back to it. It is what it is. Let's go for another example. And actually here we have another example for supply, for example. Pretty simply, we can see these 3 red big candles just shooting down like crazy. Then we would be looking at the last candle that wasn't going into that direction, you know, in that case, this green candle here, and we would be marking it up from the very bottom to the very top. We could also take this high into consideration just to be safe, and then we could drag it all the way to the right, and we can see we had another touch here. And the moment, for example, we had a touch here, you know, we could have entered, we could have waited here for the confirmation, whatnot, put no stop loss either above this zone here, at the 50% of the zone, you know, just over this wick. This is like just something that you have to figure out for yourself. What kind of risk do you want to take for yourself, right? Here we would have another example of a good little scalp as a demand trader. You know, we went up like crazy here, like the rally was just insane. Here's the last candle that did the opposite, so we are just marking it up like this. You know, we would be dragging it all the way to the right. You can already see what happened here. And if we, you know, drag it all the way to the left, you can see we had a touch here, and we could have traded at least for a quick little 1-to-1 and whatnot, you know, or even more, you know, in that case, and we would have been good to go. But here you can also see why it's always good to not go for the craziest risk to reward ratios. You know, it's good here, like a 1-to-2, 1-to-1, whatever is good enough. You know, it is just what we need to pass challenges, you know, to increase capital. It's all right and perfect. All right, and here in actual real life market conditions, you can see the candles are printing as we speak right now. We can see this is London session still on gold, and we had a demand zone this morning. Unfortunately, I missed this trade. Yikes, but it is what it is. So here it's pretty simple. We have this, you know, rally to the upside just before London session opened, and we can see that here's like candles that we could mark up. Now, if we only took the last candle, right, that would have been enough, right? Almost, because it almost touched. But that's why I'm saying always take the other candles into consideration if they're like almost the same size. And also, since we are on the 15-minute time frame, you know, these 3 candles actually make a 15-minute candle. So we have even more confluence that this will be a demand zone on the 15-minute time frame. And we can see we had a touch just beautifully here. We could have, you know, entered the trade either aggressively or, you know, with the break of the candle, for example, here. Once again, stop loss either under the zone at the 50% of it or under, you know, the most recent candles. We would be, you know, taking out these highs and whatnot, and, you know, we would have had a crazy trade over this morning. By the way, you can see, like, we shot up once, right, and we came back slowly. We wasn't like rallying up. We came down slowly, and then, you know, we had a valid push up again. And here you can see, at least as of for now, that this supply zone here didn't really, you know, held on for too crazy, because the rally itself wasn't too strong, and then we eventually broke the zone. This is invalid right now. Alright guys, here we have a more extreme example. We are on indices right now, US 30. I just love this pair, very volatile, especially in the New York session. By the way, a video about which currency pair should you be picking and timing is coming to the channel, so make sure to subscribe to the channel and give a thumbs up. But here is just a beautiful trade, because we can see, like, beforehand here the trade just went down like crazy. Like, the market went down like crazy, right? We have this rally to the downside. We even broke structure here and also here. And what we would be doing right now is just marking up this candle here, just like so. And you can already see the touch was just insane. We shot down like this and actually came all the way back here. But the moment we saw like rejection like this, personally, me as an aggressive scalper that I am, I would be taking this entry right here, stop loss above here. And you can see the 1 to 2 risk to reward ratio would have been hit in no time. And you know, if you aim for these levels, for example, you know, it would have been hit. And actually all of this would have been hit in no time. Here we can see, by the way, the zone held again. We actually almost came back to it. You know, you could almost argue that this was a touch, you know. I mean, technically seen it was not, but you know, if we, for example, look on US 30, for example, not on capital.com on TradingView, but forex.com, maybe that would have been a touch. Still, with experience, you would know, okay, so this is a rejection right now, and we are, you know, we are still bearish. And you know, we could have entered the trade right here once again and had another trade just like that again. All right, guys, it's a little bit to the right. It's on purpose, right? Here we can see on London session, US 30 just had a complete rally to the downside once again. So we could be marking up these areas here, you know, these green candles. You know, I made this on purpose like this. And if we then go to the right, by the way, we can extend it a little bit because of these candles. If we look to the right, then we can see that we actually broke through this here for once. But then it's important to remember that, you know, trades can still be better because we broke through the zone, but we came right back under it. And the moment that this candle printed and printed this next one, you could have gone into the trade right here. If you wanted to be safe, you could put your stop loss above here and just trade this whole range to the downside. You know, a beautiful another example for supply. On the other hand, you can see that the demand zone here also held. Like if you mark it up like this, the demand zone never get touched again as of right here. Then you could have taken your entry. I mean, here you can see it's a little bit choppy, you know, it took some time, but eventually this trade as well, you know, took place. Whatever, if you took the trade like this, you know, wait for the break and retest, the 1 to 2 would eventually be hit, but this would be a trade which would have you, you know, a little bit more nervous. So that is my video for supply and demand as of right now. I hope that I could help you with this. It's pretty simple, right? Supply, wait for price to just go up again, right? Wait for some sort of rejection, or if you're aggressive like me, go into that trade and then, you know, go down. For demand, it's vice versa. If price is down, you know, and it suddenly shoots up, just mark up this zone here by, you know, marking up the highs and lows of a candle and just wait for price to come back to that and then take your next entry to buy again. Always vice versa. It's always the same, always the same. So yeah, that was supply and demand. I'm using this strategy almost daily. And if I'm not using that, I'm using, for example, break and retest on the line chart and whatnot. A strategy to that will also come to the channel for absolutely free. So if you enjoyed this content and if you can't wait for this video, please like and subscribe to this channel. And yeah, I don't have much to say. This is my Instagram, my only Instagram, by the way. I won't ever reach out to you first, guys. And make sure to follow me there. You know, TikTok and shit is, you know, everything is down in the description. But yeah, that's gonna be it for the video as of right now. I hope I could help you guys, and I see you in the next one. Bye.